Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, have a beautiful retirement. I am one of your co-hosts, Ben Barzideh. And of course, as usual, I have with me my trusted, esteemed, very smart co-host, Matt Nadeau.
Hey, everybody.
We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington. And we are fiduciaries, and as an independent family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies just buying everything up these days.
They're buying everything. They're even probably buying up all those teams out there at World Cup that's going on. And everybody, we want to say hi to our clients who are listening today. You know, we always appreciate you, and we definitely appreciate the trust that you place in us, and we love every one of you. And we have a great show. We had a lot of stuff going on this week, not to mention we just said World Cup started, Ben. I'm sure you're watching.
Soccer was my first love. I played it my whole life growing up.
That's right. And I'm moaning the fact that Italy again didn't make it. So my family is sad, but we got U.S. to root for. So let's go U.S.
Absolutely.
So other than World Cup, here's some other big things we want to talk about that happened this week. We had the April inflation report that came out and really helped hopefully point towards a transitory thesis.
Transitory.
Yeah, it's a great word. Hopefully it counts this time. Now, we also had news the Iran war's over.
Yay!
Hopefully, maybe. And then Friday morning, SpaceX IPO'd. Big news, huge company. Everybody's talking about it. But there's some other big IPOs coming up. And maybe these IPOs as a group did have some responsibility for some of the market volatility and downturn we saw over the past couple of weeks. So going to talk about that.
Now,
and then
you love yourself some SpaceX, right?
Man, you know I love it, SpaceX. I want all the SpaceX. I want an all-you-can-eat buffet of SpaceX.
Hey, if loving it is wrong, we don't want to be right.
All right. I don't know if I want all that much, but hey, don't go buy it just because we're saying jokingly how much we love it.
No doubt.
And then later in the show, we actually are going to talk about Trump accounts a little bit. They're scheduled, I think, to come out in July 4th. So Ted Cruz specifically was talking about them as a potential path to Social Security privatization. So we're going to dive in and talk a little bit about that as well.
But before we start, we encourage you to like and subscribe to our YouTube channel on moneyhourradio.com. That way you will not miss an episode. You can also subscribe to our weekly economic newsletter. It's called the 5-Minute Market Brief. It's informative, succinct, easy to read. You get a really good idea of what we're seeing and analyzing in the market this week. That's on bnwealth.com. And while you're on there, hey, follow us on our social media pages on Facebook and Instagram. All right, Matt, let's get into it.
Yeah, let's talk about it. We had a lot of action this week. Inflation numbers, SpaceX went live, World Cup, and the Iran war finally over. Finally, Ben. All right.
Yeah.
Well, maybe not that last one. We have no idea what's going on with the war as usual, but we're going to come back to that in just a minute. I want to focus first on inflation. And believe it or not, we actually think that there was some pretty positive inflation news that came out. And
finally,
it's hard to tell when you just look at the headlines, but it was positive. There was a few things that were. So here's what we mean. First, I want to start with the headline that doesn't sound good at all. The yearly rate of inflation did go up to 4.2%. That's higher than it was last month at 3.8%. And that 4.2%, it's the highest level we've seen since the middle of 2023. So that's certainly not the good point or good part, Ben. But at least it matched the estimates, right?
Yeah, people were expecting that. However, looking deeper at the data, headline CPI growth actually cooled from April's 0.6% down to 0.5% in May, again matching consensus estimates. But here's what's interesting. If you filter out food and fuel, the core CPI edged up a modest 0.2%. That was lower than the estimated 0.3%. So that's really good news because the data is showing that the uptick in inflation is pretty much solely caused by the higher oil prices and it hasn't really spread to other areas yet. So therefore, as long as oil prices do start coming down sometime soon, that inflation should moderate again. And then the biggest takeaway from the May CPI was that the data kept the transitory thesis alive. And as long as it's transitory, it should come down soon, meaning that it greatly reduced the chances of a Fed rate hike this year. There was rumors of that going around.
When have we heard this transitory inflation thesis before, Ben?
Boy, last time I got it so wrong. But Jay Powell said that.
Wow, that was tough in 2022. But a little different this time, and the key, and that's why we want to talk about the Iran war, is oil prices are the trigger right now we're worried about. So let's talk about that, because earlier this week, Tuesday or Wednesday, I think, there was some more heavy rounds of bombing. But then Thursday, President Trump came out and he said the war is over. And hey, guess what? He also said Iran agreed to U.S. terms, to the peace deal, and they're going to immediately open the Strait of Hummus. I think that's what it's called, right? All you vegans out there who love hummus, don't have to worry about its price going up or the supply getting cut because it's open.
Exactly. Of course we kid. It's not the Strait of Hummus. It sounds like it. It's the Strait of Hormuz.
Yeah, okay. Not a great joke, but we're dads, so it's dad jokes. Now, really, the key thing is whether or not the war is over. I think the good news we need to take from a lot of this is that oil prices have come down. And they've stabilized, and they could potentially even come down more, because Trump also let out a little secret this week on Wednesday. And Ben, it was quite a doozy.
No doubt. So President Trump said that the U.S. has secretly brought millions of barrels of oil through the Strait of Hormuz over the last month. And he said, quote, "We've been taking out millions of barrels of oil. Nobody knows it. You know who doesn't know about it? Iran. Well, until right now." Trump told reporters in the Oval Office, "We took out the other night 22 ships late at night with no lights because they don't have any radar, because we blasted the crap out of it." And it actually resulted in more than 100 million barrels of oil and more than 200 commercial ships safely traveling through over the last month. So that was good news. So Trump said that the clandestine oil flows are one of the reasons that oil prices are below $100 a barrel. So hopefully that continues.
Okay, we'll see. It sounds like Secret Missions, that is some fictional show on Apple TV or something.
Good show to watch.
All right, let's talk about SpaceX. Some of the biggest news this week. It's been highly anticipated. It's the IPO. It went live Friday morning. And what's interesting beyond the excitement of that is we wanted to look at it from a little different direction, is that you could maybe make a case that part of the downturn in the markets over the last week was actually partly due to selling to actually free up money so they could buy SpaceX and maybe some more of these other big IPOs that are coming out in the next potentially few weeks. And there are 3 massive AI public offerings looming. And we're not talking just like one, they're all coming at once. So SpaceX, which we just talked about, launched Friday morning. And then we've got OpenAI, who is behind ChatGPT out there. And then Anthropic, who a lot of you may know has the Claude AI software out there. And they're scheduled to come out later this summer, maybe early fall. There's still some uncertainty on the exact time frame. So again, SpaceX isn't exclusively an AI company, but we're seeing that it also houses something called xAI, which is a large part of what SpaceX is offering.
And the amount of capital being sought by these 3 firms is just enormous. So $75 billion for SpaceX and around $60 billion each for both OpenAI and Anthropic. That's nearly $200 billion in share supply coming to the market in the next several months. And also keep in mind that on top of that, there was $80 billion of secondary share offerings by Google that was just announced. So for context, the largest IPO we've ever seen in the US market has all been less than $20 billion. So this scale is just enormous. This fear gets back to a simple truth about the markets. Stocks go up because there are more buyers than sellers. While with nearly $200 billion in share supply looming over the next few months, we are going to need a lot of buyers to appear to absorb it all. So there's a thought that investors have been raising cash to buy up all this supply by selling out of the other areas of the market, with many trimming stakes on the recent winners in their portfolios. So maybe that's why tech got hit the hardest this last week and a half.
Exactly. And these indexes that we measure, the S&P 500, the stock market, they're pulling stocks out of there to buy stuff that aren't in the indexes. So that's why you see the market coming down by these bigger pieces. So the good news, though, is regardless after that little issue, it looks like markets are starting to rip higher again. They shooken off some of those recent losses, and we're still bullish. We haven't taken our foot off the gas in our actively managed advance and protect models that we manage for our clients. And remember, we don't just manage a little bit in everything. We intelligently diversify by investing only in areas and asset classes that are based on our research, that are gaining momentum and strength, and we avoid areas that are deteriorating. We have other investments like silver, copper, gold. We have the Magnificent Seven stock. We even have a portion for some in rare earth materials. This is like one of those portfolios you could brag about to your friends, and we're very bullish. If you want to learn more about how we invest actively for our portfolio, how we have a defensive position where we'll get out when the markets have too much risk, please reach out. Call our office at 847-780-2980 or go to bnwealth.com. All right, when we come back, we're going to talk about Trump accounts. All right, welcome back. Thank you for tuning in. This is Money Hour Radio. It's a show where we try and help you grow your money, pay less taxes, become a little more knowledgeable, and of course, have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I have with me my co-host, my trusted sidekick, the one who brings all the jokes to the show, Ben Barzideh.
Hello, everyone.
We're both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. We're an independent and comprehensive financial planning firm, and we're local. We're right here in Barrington, and we're here to serve the greater Chicagoland area.
Now, before we start our next topic, as usual, we just want to give you a quick reminder. Please subscribe to our YouTube channel on moneyhourradio.com. That way you will not miss an episode as soon as it comes out. And then please subscribe to our weekly economic newsletter. It's fantastic. It's called the 5-Minute Market Brief. It lets you know really what we're seeing and analyzing in the market this week. You can find that on bnwealth.com. All right, now we're going to talk about Social Security. And there was a big negative headline that came out this week, and it was about Social Security. You may have seen it, and it was referring specifically to its insolvency. Basically, unless Congress acts, the Social Security Trust Fund is expected to run out of money in 2032, at which point beneficiaries after that will only receive 78% of the promised benefits. And the Social Security and Medicare boards of trustees said. That was Tuesday of this week. And Social Security is very important, of course. It provides benefits to more than 70 million retired workers and people with disabilities and plays a huge role in the finances of older adults. Among Americans, get this, among people 65 and older, 40% rely on Social Security for half or more of their income, with about 14% depending on it for 90% of more of their income, according to AARP. So that is, of course, very concerning, as the 78% reduction would basically mean about a 25% cut in the benefits each person is receiving right now. Yikes.
Yeah, it's tough. But here's the thing, and we touched on this last week, and we've explained, like, there are definitely some measures that can be taken and implemented to fix the solvency. It's going to take some political courage. There's going to be some changes. And, you know, unfortunately, we've seen politicians don't like to make tough decisions until they have to. And we assure you, it would almost be political suicide for have a politician let people's Social Security get cut by 25%. It's like, fire them all. So, like, people would be out with pitchforks. We don't believe that that is going to happen. Chances are it won't happen, but they're going to have to do some things. They could either raise the age at which you can apply for Social Security, they could raise Social Security taxes, or they could even make it where there's like testing for how much income you have. If you make too much money, you get less Social Security. So it may be some, it may be all. There's a lot that they're going to need to do. It's really important they do something. But here's, you know, potentially what's interesting. A lot of people out there's some out there who have proposed having Social Security be either fully or partially privatized. so that this trust fund could be invested in the stock market and not just invested in conservative treasuries. And over time, certainly the stock market has returned a much higher rate of return than treasuries, but there is fear that volatility and uncertainty of the market out there. So it's some stuff that's always raised some concerns.
You know how we're talking about people who would be out in pitchforks if they cut Social Security? That might be one of the most unifying. You want to talk about bipartisanship?
that would be bring the country together in hate.
Everyone together. All right. So here's what's interesting. Senator Ted Cruz, Texas Ted, or Beautiful Ted, as Trump calls him sometimes, he had something interesting to say recently about Social Security. And it was actually connected to the new Trump accounts available for newborns. So as a reminder, with Trump accounts, if you open one up for your newborn, the government will put a $1,000 seed money in there. And people, usually parents or grandparents, can also put up to $5,000 a year into the accounts until the child is 18 years old. At that point, the Trump accounts basically becomes an IRA for the owner. And the funds will, of course, be invested in the stock market, so they have a good chance of growing over the long term.
Yeah, and this was, I think, originally something that Ted Cruz thought of before they were called Trump accounts. This was something that he liked. And so he really had a lot to say about it. And so for the Trump accounts for children born between 2025 and 2028 could, according to Ted Cruz, open the door for Americans paying their payroll taxes into personal accounts invested in the stock market, instead of actually going to the federal government, which has borrowed from Social Security Trust Fund for years. And Cruz suggested this at a panel discussion at a recent Milken Institute Global Conference in Los Angeles earlier this week. And his focus was saying the Trump accounts could potentially be like a way or a paving the way to transforming Social Security, which, as we've talked about, has been facing some shortfall. I think the number is $230 billion in 2026.
Massive. So here's what Cruz said. Here's the dirty little secret. Trump accounts are Social Security personal accounts, said Cruz, arguing that the establishment of Trump accounts represent an important conservative victory in taking a step towards privatization of Social Security, something that actually former President George W. Bush attempted but failed to do so during his second term. So how do we get it done? You remember George Bush tried this in his second term, and sadly, Congress ran for the hills in a display of extraordinary cowardice. That's what Cruz said. So how did we get it done this time? Cruz said it's because we gave the money to babies so old people didn't get pissed. Okay, Cruz. But guess what? He said babies grow up. So that little girl who was born this year, and the math is if you contribute regularly to the Trump account at $5,000 a year, by the time that child is 18 years old, she'll have $170,000 in that account. That's if it's grown at around 8% a year. By the time she's 35, if she keeps putting $5,000 a year into it, she'll have $700,000 in that account. And this will become kind of like a Social Security personal account, he predicted.
So here's where he takes the next leap, right? He's saying, he argued, once not just the young people, older people start seeing how these Trump accounts are accruing for young Americans, then maybe they'll want to see their payroll taxes go into their personal accounts. So I'm going to quote Ted Cruz, and he said, we're going to be able to go to parents and say, hey, you know that Trump account your kid has that you're seeing the numbers go up and you're seeing this compound growth, wouldn't you like to be able to keep a portion of your tax payments that you're paying already? And instead of sending it to Uncle Sam, wouldn't you like to just have an account, like a Trump account, like your kid has? And he's predicting this idea of a government-funded personal investment and a retirement account would catch on like wildfire. And his prediction, his quote, my prediction is within 5 years, that's going to have a really compelling constituency because people will have seen it.
So whether that happens or not, Trump accounts can potentially be a great saving and investing tool. But here's a way to make it actually even more powerful. So your child can have Trump account and a Roth IRA. You don't have to have one or the other. And as long as there is some earned income for your child, and that can be defined very broadly, we've talked about this, things like cutting grass or babysitting, that can all count as earned income. So as long as there's earned income, your child can contribute to a Roth IRA. So here's an example. Imagine your child earns, let's say, $3,000 a year from odd jobs and invest that into a Roth IRA for just 5 years. So 5 years of $3,000 going into it from age 16 to 20. And then he or she stops contributing from that point on. And that money grows at an 8% per year rate. Well, guess what? By age 65, there will be $573,000 in that Roth, all tax-free from just those 5 years of money going in.
Yeah, and this is one of the reasons with like the Trump accounts, I think it's important to have an advisor or somebody like us who can help advise them. This Roth situation is even better if you have earned income than a Trump account because all the earnings is tax-free. So you got to learn what to prioritize. And of course, newborns are the only ones who are getting the seed money. And so they're not going to have earned income yet. So you've got two different age ranges.
Correct.
And you want to pick the right accounts for each one. The idea is get them started early with any kind of investing because time is so valuable with investing. So like, let's just do a simple example. Someone who starts on an investment path 10 years later, so rather than at 16, like you brought up there, Ben, now they start at 26. That same contribution could grow to half as much by age 65. The numbers, using some math is about 265,000. So time is critical. Getting started early is so important. And the real hope is whether it's a Trump account, a Roth for your kids. There's even accounts out there called UTMAs, UTMA. There are ways to save money for your kids. And some of them have different bells and whistles, different tax benefits. So you should reach out and look at working with a professional like us. So like with any financial planning, investing, or estate planning strategies, you need to work with a qualified professional who understands these concepts, can tailor them to your situation, and a good planner like us can be the quarterback of your plan and help coordinate all of those other professionals like your CPA or an attorney out there.
And if you are in need of a knowledgeable financial planner, someone who puts your interests first, we would be honored if you gave us an opportunity to speak with you. If our investment and financial planning philosophy resonates with you, then please reach out to us and schedule a complimentary consultation. We'll go over your current financial situation and your goals. We can also provide what we call a financial checkup, where we analyze your insurance, taxes, estate plan, and investments. If things look good, then again, you'll gain some peace of mind. And if there are holes, then you'll know at least what areas you want to fix. And if you want, we can even do kind of like an investment analysis on your portfolio, basically like a second opinion type of analysis. And many people we speak with they tell us they've never really had anyone look at all areas of their financial plan all at once. So if we can help you, that's great. If not, we'll still part as friends. To explore becoming a client, please reach out to us online at beinwealth.com or call our office at 847-780-2980. All right, we are out of time. God bless everyone, and we'll talk to you next week.
Take care, everyone.